SA 700 Forming of an opinion reporting on the financial statement. The objectives of an auditor under SA 700 are to form an opinion on the financial statement based on the evaluations of the conclusions drawn from audit evidence obtained, to issue a written report known as audit report. Forming of an opinion on the financial statement. Auditors to form an opinion whether the financial statements are prepared in all material respects in accordance with applicable financial reporting framework. In order to form that opinion, auditor has to obtain a reasonable assurance that efforts as a whole is free from material mistake, whether due to fraud or error. If the financial statements are prepared as per fair presentation framework, whether the financial statements auditor shall evaluate whether the financial statement achieves fair presentation by considering the overall structure, content, the presentation of the financial statement, and the financial statement including related notes represents underlying transactions and events in a manner that achieves fair presentation. In other words, auditor should issue unmodified opinion when he concludes the financial statements are prepared in all material respects according to the applicable financial reporting framework. Unmodified opinion is the auditor concludes that the financial statements are free from material misstatement to give a true and fair view and are prepared in accordance with the applicable financial reporting framework. Indicators of unmodified opinion: the auditor has obtained sufficient amount of audit evidence and the financial statement contains adequate information required by law and regulatory. The significant accounting policy changes that have been adequately disclosed in the financial statement. Financial statements are prepared in all material aspects and according to the applicable financial reporting framework. Evaluations to be made by an auditor. Auditor shall evaluate whether the financial statements are prepared as per applicable financial reporting framework. While evaluating, auditor shall consider the qualitative aspects of India's accounting practice and specific evaluations. Qualitative aspects of India's accounting practices. The management makes number of judgments on the amount disclosure in the financial statement, and there may be an existence of the management bias or lack of neutrality. These situations which may cast a significant doubt on the entity's situations which may cast the entity's reliability of the financial statement, that the financial statement may be materially misstated. As the indicators of the management bias or lack of neutrality are selective correction by the management of the misstatements brought to the notice by the auditor to the management, correcting only those mistakes which cause increase in the reported earnings, ignoring the mistakes which cause decrease in the reported earnings, and possible management's bias over selecting appropriate accounting estimates, frequent changes in accounting policy without proper reason. Specific evaluations to be made by an auditor are the auditor shall evaluate whether the financial statement contains adequate disclosure about the significant accounting policy selected and applied, whether the accounting policy selected and applied consistently and are accordance with the applicable financial reporting framework and are appropriate, and the management whether the management estimates are reasonable, and whether the financial statement contains the information that is relevant, reliable, comparable, understandable, and not misleading, whether the terms including the title of each assertions are appropriate. And modified opinion: when the auditor based on the evidence, auditor concluded the financial statements are not free from material misstatement, or the finance auditor is unable to obtain sufficient appropriate audit evidence to provide a basis to the auditor's opinion to conclude the financial statements are free from material misstatement. The content of auditor's report: first, a title, the addressee, the opinion, basis of opinion, material uncertainty related going concern, key audit matter, emphasis matter, other matter paragraph, other information paragraph, responsibilities of the management for the financial statement, auditor's responsibility related to audit of a financial statement, report on other legal regulatory requirements, signature, date of place of signature, UDIN, opinion. The opinion section of the auditor's report shall identify the entity whose statement have been audited and state the financial statement been audited, not in case of disclaimer of opinion. Specify the list of statements which comprise the financial statement, and refer to the notes including the summary of significant accounting policy, and last one, specify the date period covered by the each statement. So, and opinion: in our opinion, to the best of the information according to the explanation given to us, our aforesaid financial statement comprising the balance sheet, statement of profit and loss including other comprehensive income, statement of changes in cash flow, statement of changes in equity, and other explanatory notes including the summary of significant accounting policy as on the year ended so and so date. In our opinion, to the best of the information, our aforesaid financial statements give information that is required in a manner so required by Companies Act 2013 and give true and fair view in conformity with the generally accepted accounting principles, including the Indian Accounting Standards (Ind-AS) as prescribed in Section 133 of the Act of the State of Affairs of said 31/3 so and so date of the balance sheet, statement of profit and loss, including other comprehensive income, statement of changes in cash flow, statement of changes in equity of that year ended for data. And the basis of opinion: we have conducted audit as per standards on auditing. Our responsibilities in relation to audit of financial statements are further stated in auditor's responsibility in relation to audit of a financial statement section of our report, and we are independent of the entity as per the ethical requirements issued by ICAI Code of Ethics, and we have complied with other ethical responsibilities related to an audit of a financial statement as per ICAI Code of Ethics. And we believe the evidence we obtained is sufficient and appropriate to provide basis of our opinion. And the responsibilities of management for the financial statements: the auditor shall use the term management in accordance with the context of the legal framework. In some entities may refer to those charged with governance. The management is responsible for preparation of financial statements in accordance with applicable financial reporting framework and determine as appropriate internal control to enable to preparation of financial statements that are free from material misstatement due to fraud or error. And the management is responsible for ascertaining the going concern basis of accounting is appropriate or not, and if applicable, disclosure about the material uncertainty related to going concern. This assessment shall also include description of when the management use of going concern basis of accounting is appropriate. Auditor's responsibility in relation to audit of a financial statement. The primary responsibility state the objectives of an auditor. Auditor has to obtain reasonable assurance that refers as a whole is free from material misstatement, whether due to fraud or error, and to issue an auditor's report includes the auditor's opinion. Reasonable assurance is a high level of assurance, but it is not a guarantee that the audit conducted as per standard on auditing will always detect a material misstatement when it exists. Misstatements can arise from fraud or error, and either state the items are considered to be material when it reasonably expected to influence the economic decision of the user taken on the basis of the financial statement, or provide a definition of materiality or description as per applicable financial reporting framework. Responsibilities of an auditor and under SAR. The auditor's report shall state the audit conducted as part of an audit. The audit conducted as per SA as part of an audit. Auditor exercises a professional judgment and maintains professional skepticism throughout the audit. State the audit by describing the risk assessment. Auditors to assess the entity's ability. Auditor identify the risk of material misstatement due to fraud or error in the financial statement, and design and perform audit process in appropriate to response to those risks, and obtain evidence for the auditor's opinion. And the risk of not identifying the misstatement arising from fraud is higher than the risk of not detecting a material misstatement arising from error, because the fraud involved collusion, falsification, intentional omission, the misrepresentation in the management's overhead of internal control. Auditor has to obtain understanding of the internal control, not for the purpose of expressing opinion on the effectiveness of the internal control. Auditor's report shall omit the praise that if the auditor is responsible to give the opinion on the effectiveness of the internal control, shall omit the praise that auditor consideration of internal control, not for the purpose of expressing opinion on the internal effectiveness of the internal control. And appropriateness of the accounting policy, reasonableness of the accounting estimates, and related disclosure made in the financial statements. Appropriateness of the going concern. Auditor shall consider whether there is a management's consideration of going concern basis of accounting is appropriate, and if based on the evidence, auditors finds that any material uncertainty related to going concern exists, the auditor shall draw the user's attention to the disclosure in the financial statement. If the disclosures are not sufficient, the auditor shall modify the opinion. The auditor's report conclusions is up to the date of auditor's report. However, the future events and conditions may cease the entity's ability to continue as a going concern. And fair presentation framework. If the financial statement prepared as per fair presentation framework, whether the financial statement achieves fair presentation by considering overall structure, content, presentation of the financial statement, and represents the information in underlying transactions and events in manner that achieves fair presentation. And communication in case of group audit. When using the work of another auditor, SC 600 applies. Auditor's responsibility section shall also state that the responsibility of the division of the financial information of the entity, division of responsibility for the financial statement of the entity by expressing the extent of the financial information of the component or audited by some other auditor, or including the financial information of the entity. For example, the number of branch subsidiaries have been audited by some other auditor. And communication responsibilities. Auditor shall communicate with those of the governance about the planned scope, timing of an audit, and significant findings in an audit, significant deficiencies in internal control identified during an audit, and communicate the ethical compliance with the ethical responsibilities, like regarding independence and any known relationship, and if applicable, the related safeguards and information the reason is expected to bear on the auditor's independence, and if applicable, related safeguards to the charged with governance. And communication of key audit matters as 701 applies. The auditor shall communicate, select those matters which are communicated those charged with governance, and key audit matters are those matters are the most significant audit of financial statements of the current period, and therefore key audit matters. Auditor shall communicate those charged with matters in the auditor's report about the key audit matter unless the law precludes such disclosure, and in extremely rare circumstances that the communication of the matter which will cause the adverse consequences in the auditor's opinion that it outweighed the public interest benefit on such communication. And then auditor's responsibility in case of disclaimer of opinion. The auditor's responsibility in case of disclaimer of opinion section shall amend the statement that the auditor responsibility is to conduct an audit as per standards on auditing and give auditors a report. But due to the matter stated in the basis of disclaimer of opinion section of our report, we are unable to obtain sufficient amount of audit evidence to provide a basis to our opinion, and we are independent of the entity. We are compliant with other ethical responsibilities. And then in supplementary information, if the auditor's report, if the financial statement, if the management gives supplementary information which is not audited, if it is not, the auditor shall use the professional judgment that whether the matter is whether the supplementary information integral part of the financial statement or not integral part of financial statement. If it is integral part of financial statement, auditor's opinion shall also cover the supplementary information. If the supplementary information is not integral part of the financial statement, the auditor shall check whether the disclosure made by the management about the supplementary information or differentiates from the audited financial information. If it is not differentiated, then auditor shall ask the management to give a presentation in such a way that is differentiated from the audited financial information. If the management is refuses to do so, the auditor shall modify the state in the auditor's report about the supplementary information which is not audited.